Don't buy a stock or shares of any company without looking at this number. To give you an example, if you are an investor at the Nairobi Securities Exchange, a mistake which investors typically do without even realizing is they might look at the share prices. Maybe compare a share of Safaricom and BAT. Currently, the share of Safaricom is going at 35 shillings per share. BAT share is going at 575 shillings per share. An investor might outrightly assume Safaricom is cheap and BAT is expensive. That is quite an arbitrary way of deciding the health of a company. And that is why you need to be looking at EPS or earnings per share. In this video, I'm going to explain to you in details how you can be looking at EPS, what it means, situations when EPS is going to assist you make objective judgment, and even the few situations when EPS as a standalone measure might be misleading. So watch the whole of this video for you to understand this important metric that you should be knowing as an investor and utilizing before you buy any stock out there. In case you are new here, welcome to my channel. My name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you these amazing videos on investing and making money each and every day. Having said that, EPS stands for earnings per share. It tells you how much profit a company makes for each ordinary outstanding share. And the formula for EPS is net profits divided by number of outstanding shares. Think of it this way. Imagine a company earns 10 billion in profit. If it has 2 billion shares, then its EPS is 10 billion divided by 2 billion, which is 5. That means every share represents 5 shillings of the company's annual earning. Why does EPS matter? EPS shows you how profitable a company is on a per share basis. Instead of asking how much profit did the company make, you ask a more important question: how much profit belongs to each share that I own? Now, that is a more objective way of looking and even appropriating profit. Let's now compare two companies. You see the difference. Imagine company A and company B. Company A net profit is 20 billion Kenya shillings. Shares outstanding is 10 billion. It means its EPS is 2 shillings, okay? And then company B, which has a lesser profit. Company B has a profit of 10 billion. Its shares outstanding are 2 billion. It has an EPS of 5 shillings. At first glance, company A looks like a better company because it has more profit, 20 billion versus 10 billion in company B. But then EPS says something very different. Based on EPS, company B seems to be much healthier. Higher EPS on general means better, okay? Generally speaking, a company with growing profits, right? Stable operations and efficient management will often report a higher and growing EPS. For example, in case in year 1, the EPS is 5 shillings. Year 2, EPS is 6 shillings. Year 3, EPS is 8 shillings. That's a good sign because the company is generating more earnings for every share investors own. You shouldn't make a mistake of only analyzing EPS in isolation. A high EPS doesn't automatically mean a stock is a great investment. You need to ask yourself comprehensive questions. For example, is the EPS growing every year? Are profits sustainable? Is the company in too much debt? Is the stock already overpriced? Always combine EPS with other financial matrices for you to get the bigger picture. Now, 3 scenarios when EPS could be misleading. These are unique scenarios, but sometimes you analyzing EPS in isolation, it could be misleading. And the first scenario is when there's a once-off profit. Maybe a company sells land or another major asset. It creates a temporal jump in profits, okay? As a result, EPS increases. But next year, those profits disappear. Always check whether earnings are coming from company's core business or once-off kind of dealings. And then the second scenario is share buybacks, okay? Whereby a company might buy back some of its shares. In case it does, it's gonna reduce the number of shares outstanding. And assuming the same profit level, EPS might jump up. The third scenario is different industries. Compare EPS of companies within the same industry or sector. Case in point, if for example you are an investor at the NSC, you are looking at the shares or EPS of Equity Bank. Don't compare Equity Bank to maybe Kakuzi. Don't compare Equity Bank to maybe at River Mining. Those are different sectors because Equity Bank is in banking, okay? Kakuzi is in agriculture, okay? At River Mining is in manufacturing and allied. Compare only companies within the same sector. And I'm saying so because the profits, the trends, the operating costs vary across sectors. That's why you should compare only companies within the same sector. That's a more objective way of comparing. And so based on this, a real investing tip for you is that when researching a stock, check whether EPS has been growing consistently, has been stable over several years, and is supported by strong revenues and cash flows. Consistent EPS growth often reflects a healthy business. It is one of the metrics you can use to detect healthy business. But then again, don't look at EPS in isolation. In addition to EPS, you need to be looking at other ratios too or metrics. For example, the price earning ratio. Are you paying a fair price for those earnings? Revenue growth. Is the company expanding? Return on equity. How efficient is the company using shareholders' money? Okay. Debt levels. Can the company comfortably meet its obligations? Free cash flows. Is the business generating real cash or is it strained of cash? When you look at all these metrics together, it gives you a wholesome picture, okay? So, before buying any stock, remember the 5 lessons I've told you. EPS tells you how much profit each share earns. Higher and growing EPSs is a general positive sign. Don't rely on profit alone, always check EPS. Watch out for once-off gains or even share buybacks for you to decide, okay? And then lastly, utilize EPS together with other metrics for you to be able to have an objective way of deciding based on EPS and other metrics which are key to a company's health. What do you think? Have you been utilizing EPS? If you haven't, I hope this video has given you insight which you can utilize for you to be able to make informed decision when you are doing purchases in the stock market. Cheers guys, and catch up in the next video.